Earnings season is almost here. It kicks off mid-July with our major financials, and in this video, I want to show you how to profit from this particular earnings cycle. The reason why I think this earnings season is going to be interesting, take a look at the VIX here. VIX looks at a very interesting place, maybe ready to pop off at the same time when the S&P 500 looks at a place where it might start to perk up both in terms of volatility along with price. We've been chopping around sideways for quite some time, where it feels like earnings season might be the catalyst that pushes us through. Now, to help us prepare for this earnings season, I've also updated the pre-earnings indicator. For all of our Volatility Box members, you can download it for free on our website, tosindicators.com/earnings. I also have, this is an hour-long video which walks you through how to use the indicators in more detail. This is the pre, the post, and the actual day of earnings indicators. Now, I've made some updates to our pre-earnings indicator. Volatility Box members, you can make sure you have the updated version by checking the year in the code. And as long as it says 2025, you've updated it basically today onwards, you should have the latest version. Now, I'm using Delta Airlines for this example, and I'll also show you Goldman Sachs for one more before we wrap this video up. Now, first thing you'll see is choose whatever time frame you want. So right now I'm on a daily time frame going back 5 years. As a result of going back 5 years, I'm looking at a total of 20 different earnings. That means 20 data points that I'm using for my analysis here. Some of you find that that's not enough. You want more data points. Simply increase this from 5 years to 10 years, and all of a sudden you'll see you go from 20 earnings to now analyzing 40 earnings just like that. Now for this exercise, I'm going to be using the 5 years. I'm going to come back, and we'll have 20 earnings in total that we're analyzing. And you'll notice here that we see this blue line plotting essentially for today's activity, which tells us that we're now within this 14-day pre-earning period for Delta Airlines using the estimated earnings date. Now, this is still an estimated earnings date, so you'll want to make sure to confirm the final earnings date before you actually place the trade. Now, let's see what our analysis is telling us. Let's start first with price. 70% of the time, we see that price tends to rise into earnings, and 30% of the time, we see that price tends to fall into earnings. The key thing here, even though we see the probability is higher for the rise, is whenever we fall, that fall is a little bit greater at a 9.38%. So I would like to avoid simply buying calls just on this basis here. It seems like if you were to buy a call and the move went against you right away, that call would almost just lose its value instantly, especially if you buy a shorter dated call. However, we do see the bias here is more to the bullish side. So that's the first little piece of information that I can add for Delta Airlines earnings. Next set is a new feature that I added in, which now groups our move sizes. There's 3 groups I've added in. One is a less than 3% move as we head into earnings, and this is for whatever days you choose. So 14 days, less than a 3% move as we head into earnings. Then a medium move. This is if we see between 3 to an 8% move. And then finally, a large move, which is greater than an 8% move. Inside of Delta Airlines, we can see that we're really fluctuating between medium and large. Not really small, which tells us that whatever fluctuations we see in Delta Airlines, you should embrace that volatility. It's very much there to stay, and it's been a personality of earnings. This tells us that very clearly. Now, the next thing we can see is our time frame comparison. This is another new feature I added in. If you remember before, we had to manually go through 14 days, then change this to 7 days, then change this to 3 days to get an idea of what the moves look like. Now, in one simple glance, you can see all 3 moves. I can see what is the 3-day pre-earnings move, the 7-day pre-earnings move, and the 14-day pre-earnings move on average. We can very clearly see that the 3 days, pre-earnings 2.52%, 7 days 4.66%, and 14 days 7.36%, which tells us that there is merit to getting involved in Delta Airlines early. You do get a larger chunk of this move. If I were to contrast that with something like, say, Pepsi, you'll notice Pepsi here, take a look at the 7-day versus 3-day comparison. 1.23% versus 1.78%. Really, you can maybe infer that between this 3-day and the 7-day period, Pepsi's just chopping around sideways. What's that? 0.5, less than 0.5% move? Not a whole lot. That's a great time to maybe sell something like an iron condor or milk a lot of that premium and then take it off before you head into that final 3-day period. Now we move into volatility analysis. We can see currently Delta Airlines fairly high IV, 55.4%. Tends to rise into earnings about 50% of the time, tends to fall 50% of the time. However, that rise is about double. So that tells us that while we don't want to necessarily just make this long volatility bet, you also see that on the upside, you have a little bit more of that implied volatility gain. So we have this delta bias to the upside, not really IV bias to the upside, but IV percent move bias to the upside. And we very much see that there is some merit to getting involved early on, 14 days pre-earnings, and we should expect that most of these moves will be large moves. Finally, we see expected move, and this is most useful when you take whatever this percentage is, so 23%, and you use it the day before earnings to project where you think earnings might take us. So take a look at this earnings cycle, for example, and you'll see that we have both the upper bands and the lower bands, and the expected move really nailed this almost perfectly to a T for Delta Airlines, where we see price gravitate exactly to the expected move. And this is really nice for things like pins, butterflies, things of that nature, which again are very low risk, high reward sort of plays, which now all of a sudden you can exactly find what is the price you want to pin at. These are your lotto ticket sort of trade ideas, so keep that in mind. You don't expect them to work 100% of the time, but when they work, they pay you fairly nicely. So now inside of Delta Airlines, if we were to summarize what we see here, we have directional bias that is more skewed to the upside. And this is using 5 years worth of data. If we were to say load in 20 years worth of data, we can see that that directional bias still remains. Greater than 50% of the time, we tend to see price rise into earnings. Now we can see that our bias for the large and medium grouping continues to hold true. However, if we add in more data, we can see early on Delta Airlines used to have smaller earnings moves or pre-earnings moves that has really ramped up as volatility has also perked up. Next, we see our time frame comparison. Summarize this one more time. Very clearly, there's merit to getting involved ahead of time. 14 days pre-earnings, we see a lot of that percentage move to that we can still take advantage of. As we get closer to that 3 days earnings, we lose a majority of that from what the 7-8%. Now we're down to almost 3.3%. So you can capture a lot more simply by being prepared and getting involved early. In terms of the implied volatility, we can see our current IV is 55%. We already talked about whether or not that's high or low. The best way to understand that relative scale is the IV percentile, where we see it's at 38%, so still sub 50. You might argue there's room for that volatility to continue to grow on the upside. Now, ways that you might take advantage of this. You could do something like either sell bull put spread. Here you're looking to take advantage of that bullish rise bias and hope that the volatility component doesn't really rise. You might also do something like come inside of our monthly options, buy a call, and then sell a shorter dated call against it, a calendar, which allows you to now take use of this potential IV rise on that longer dated call while also selling a shorter dated call to offset some of that premium and not make this as expensive of a strategy. You come into something like a Goldman Sachs now before we wrap this up, and we bring this back to a 5-year analysis now and take a look at what these stats are telling you compared to what you just saw in Delta Airlines. And I'll maybe pause this video before you hear what I say. Inside of Goldman Sachs, if we repeat the same analysis, our price is telling us we still have a bullish bias here. However, it's not as strong as Delta Airlines. We still see our average moves are fairly large, especially when you contrast them to something like a Pepsi, which is to be expected. Here, Goldman Sachs had 7 out of its 20 earnings, which were small moves headed into earnings. That's new information. That's something a little bit interesting that you might take advantage of. Medium moves about 45% of the time, large moves about 20% of the time. So a little bit less here compared to Delta Airlines. If we looked at the 3, 7, and 14 days, here we don't see the same story as Delta Airlines. It's not as compelling to get involved 14 days prior. In fact, getting involved 7 days prior, you can capture 4 out of that 5.75%, saved yourself, or maybe spared yourself 1.75% for about 7 days worth of unnecessary volatility that you had to sit through. So that's another way that you could interpret that volatility. Finally, you take a look at the current IV percent, 34%, but it doesn't really tend to rise as much into earnings as much as it tends to fall. And we also get an idea of the expected move to create the same pins like we saw inside of Delta Earnings. So this is how I would make use of this information. First, understand what is price's personality, then understand, well, what is that in terms of buckets? What tends to happen more frequently than not? Where at this 3, 7, and 14-day period does it make sense to get involved? And the volatility is that last piece to tell you, do you want to be a buyer of premium or a seller of premium, or try to do both like we just discussed in the case of Delta Airlines with the idea of something like a calendar. I hope you found this video helpful in understanding how to use our new pre-earnings indicator to really get a lot of useful information at your fingertips and then come into the options chain and craft a strategy that really works for that particular ticker with whatever earnings personality you're seeing. For all Volatility Box members, you can download the updated version of the pre-earnings indicator now. I've uploaded on our website for free, tosindicators.com/earnings. Take care, everyone. Good luck trading, and I'll see you in our next update.